I was talking of the situation where the borrower has to pay at a regular scheduled interval, irrespective of the maturity date or irrespective of whether they are making profits or they are having losses. So this puts the debt instrument holder in a situation where the lender is always benefiting of the money, irrespective of the prevailing situation. If you compare this with the equity, equity is a security that will now confer the holder an ownership interest. In other words, it's like you have some shares in that company. The only challenge is you benefit after every other person benefits. So if, for example, there is a situation where the corporation is to be declared bankrupt, the equity holder becomes the residual claimant. And a residual claimant means the corporation must pay all the other debt holders before they pay the equity holders. So it becomes, again, a real challenge. Yeah, so you can see the investor or the person who is giving out the money or benefiting from the money in case of a debt instrument is suffering. In this case, again, you are the one who has given money, but you are suffering. Then also the financial market can be according to maturity of assets. And here we talk of money versus capital markets. And money market is where the financial instruments have a maturity of less than 1 year. And I had given examples, treasury bills, they trade in quarterly, 3 months, 6 months, 9 months to 1 year. Negotiable bank certificates, commercial paper, euro dollars, etc. Whereas the capital market, they are long term. In other words, you're investing in assets whose maturity is over 1 year. And the examples are the bonds. We've given the examples down here. We have bonds, debentures, we have Eurobond, etc. They mature after 1 year. Then we have delivery of assets. We have the spot market versus forward market. And spot market is where you get the cash there and then, at most 2 days. If you are doing cross-border, of course, you have to give the overseas, the exchanges, and to be cleared by the central bank of the particular or the domicile bank. In other words, we are saying the cash market is where, for example, if I wanted to convert 100,000 Kenyan shillings into US dollar, I'll just walk into any bank, do the transaction, and I get my dollars, and I exchange with the cash. Are we together? So the cash market is cash for cash, and it is there and then. When we talk of the forward or the futures, this is the derivative market. And this occurs because you negotiate on a contract. And this contract is to be honored at a future date. For example, you can say you are negotiating on an instrument that will cost you 110 shillings today. So you expect in future, the prices will be, or the value of the dollar, let's say the value of the dollar today is 110. So you expect in future that the value of the dollar to the shilling will have gone lower for you to enjoy the profit. I think people thought that if, for example, you are to sell at, let's say, $1, you are buying at 110 shillings. If you sell at 112, are you making profit or loss? Are you making a profit or loss? I want to exchange dollars today. I want people to respond to me. Robert, Odoyo. Robert, I'm addressing you. I'll assume you are not in this class while taking the register. Miriam?
Hello.
Yes, Robert.
Yes.
I'm saying.
Yes.
Assuming.
I'm in, Mwalimu, sorry.
Yes.
I don't know, you have a lot of.
Me.
Robert, can you mute yourself first? I asked the question. I'm asking if, for example, today, $1, $1 is trading at 110 shillings. I buy the dollar. If I sell in future at 120 shillings, will I have made a profit or a loss? That question is open to everyone, not only Robert and Miriam. Will I make a loss? Will I make a profit or a loss? That's an open-ended question. You either may say profit or loss. Christine Javai, if I sell at 120 shillings per dollar, will I have made a profit or a loss?
A loss.
I'll have made a loss, correct. If I sell at 105, I'll have made a profit of 5 shillings. So the market operates in the other way. So what we are calling something, the something here is the underlying asset. The something. And this is what now will be in the contract. So when you will be doing your derivative instrument, whether it's a forward or a future contract, you will be agreeing on what your asset or what you will be selling at. So I buy at 110, but we agree I will not sell at less than 110 to make a profit. Because the price of such contracts derive the value from the value of the underlying asset. And that's why we call them derivative. Now in Kenya, the forward and future contracts are not that prominent, but by and by they are sinking in. Then we talk of the primary versus the secondary market. And primary market are security market in which newly issued securities, such as bonds or shares, are offered for sale to buyers as a primary market. So the new issues of the financial instrument can be through private placement, IPOs, book building, and season public offers. So primary market are meant to raise capital for corporation. And that's why Safaricom, for the first 3 years, they were not trading their shares at a profit because they wanted to expand fast. They were looking for capital to expand. So the initial issuer raises funds only through a primary market. But once the shares now are floated in the market, they become secondary. So secondary are those securities. Secondary markets are those security markets where existing securities that were previously issued are being resold. I think that's now clear. Then we have the structure of market, organized or over the counter. Now, secondary markets can be organized in two ways, where buyers and sellers meet in a physical location to trade, for example, NSC, and this permits the buyers and the sellers in what we call an auction. So at the auction, I'll be saying my price. Then if you have the cash, you buy. Or if you are willing to invest, you invest. Now, securities are traded on the floor of the securities exchange with the help now of the specialists, the ones who wear red blazers in our Nairobi Securities Exchange. And they combine with the broker for the dealership, yeah, or what we call for them to function. For any market to function, we must have the seller and the buyer, isn't it? Now, you cannot trade directly with the Nairobi Securities Exchange. So you have to go through the broker. So for this market to exist, we must have all the players in place. Yeah. So the trading can be done through the traditional system, where we have what we call the open outcry system. Yeah, where we declare, and then there is at the fall of the hammer, or we ring the bell. And then we have the over the counter, and over the counter, this is where we don't have the centralized mechanism. So the market is, instead of the market being a public market where the buyer and the sellers are meeting, we make the market in some type of an asset. And this is what we are calling the over the counter. So it provides an opportunity for the unlisted or the unquoted firms, the ones that are not quoted on the securities market, to sell their security. And OTC is usually organized by the dealers of stockbrokers who buy securities themselves and sell among each other or sell to the interested parties. And this maintains a reasonable balance between the demand and the supply. Are we together? So this will be done either through computer networks, through telephones. You've seen how the cryptocurrency is operating, yeah, or the Forex, such kind of a modality. So the dealers set the trading loose over the counter, specialized in securities such as corporate bonds, equity securities, etc. This is what made the cryptocurrency to be hatched. So I want to put this exercise in the portal, and I've realized some people are not responding to my activity. That's why I've placed it here for everyone to see. So this will be our third activity. You explain the various classes of financial markets. Do you have any question? I want to end the class at that point.
Excuse me.
Yes.
I have a request. It's not concerning the class today, but it's concerning the class of on Saturday,
Which class?
the financial management. I was requesting if it can be in the morning.
I have another class in the morning. I have cost accounting. At 11, I have another class. That is business statistics 2. Then in the afternoon, I have this class. The
Excuse
financial
me,
management. Yes.
We also have a class at 2 to 5 on
Which class?
Saturday in international finance.
Who is teaching you international finance?
Moses Obong, somebody.
What is the timetable indicating? Is the timetable clashing?
Yes, it is clashing because we are in the class of financial management.
How many
And
people
it's
are you in
also
the international finance?
At 2.
How many groups are you in the international finance?
We are 7.
So 7 groups, no. I'm not asking how many students, I'm asking how many.
No, not 7. We are only 7, sorry.
So that's only one group.
No, only one group.
And it's easier to change that class.
Yes.
It's easier to change that class than to change mine. Mine is shared. You talk to Mr. Odongo to change that class.
Maybe you can talk then to the lecturer.
No, I cannot talk. I'm not affected.
Okay, okay.
You see, I'm not affected, true or false. Who is affected is the
Oh,
student,
all
isn't
right.
it? You're supposed to approach mwalimu, mwambie awabadilishie hiyo class apeleke to a
Yes.
class to a time that is friendly with you. Because mine is shared.
All right.
It's very hard to change a shared class. Because you'll find where you are moving it, it will again clash another timetable program. You get? Umenielewa? Any other concern?
Mwalimu, I have
Yes.
also a request.
Mhm.
Last time you marked me absent and I was present.
Who is this?
Miriam Naleke.
Hapana, wewe Miriam, hebu angalia. Have you confirmed in
Yes,
the
I was
portal?
in, sir.
No, have you confirmed in the portal
Yes.
that you're absent? Umeconfirm?
Last time I was absent.
Last time you are?
Okay, let me check.
You can check.
You put me absent.
If it is still absent, you can
Okay.
let me know. You can call me. You can call me privately, isn't it? You can call me on my line.
All right, all right.
Any other concern?
All right.
It's okay, Miriam. Any other concern? I want to release you for the other class. There are people who are attending another class, Madam Damari's class, isn't it? They're in this class. You have someone attending Madam Damari's class. Or they are not in this class. Anyway, enjoy your evening.
Thank you.